Welcome to the Allianz Capital Markets Day 2024. It's very nice to see lots of you have made it to Munich through the snowy weather last night. And also we have lots of people watching us virtually. And on that note, I have to tell you that we are live streaming on allianz.com and also on YouTube. And a recording will be made available after the presentations. With that, I'm very happy to hand over to our first speaker of the day, Oliver Bäte, the CEO of Allianz, if you'd like to kick it off.
Yeah, let me also extend a warm welcome to everyone who wanted to be there and made it to Munich. We've been quite fortunate because the weather forecast was not so good. A big thank you for joining us today, also virtually. We've put a lot of love, not just hard work, into the things you're going to experience this morning. So a big thank you to all my colleagues, the team at Allianz who's put this together. I'm just the sort of front runner, so to speak, for the event. We have a number of colleagues also on stage today. So a big thank you to also the colleagues that are not on stage today. I will mention them in random. We cannot have the great team of Allianz on stage, so I'm trying to represent as much as I can. The presentation I'm going to give this morning, I will not go through all the slides that will be made available to you. So it's very important. This is not going to be a slide show or battle. I want to focus on a few things. But in order for you to understand the journey that we've been on and how the next chapter ties into what we've been doing before, I'd like to give you a little intro and lead you to where we're going to go. Some of the slides I'm going to skip. Doesn't mean they are bad or not important. Just for today, they have less relevance as some of my colleagues are going to go deeper into some of the topics I'm going to mention. 2015, I started as CEO. We launched the renewal agenda. 5 key levers. The most important one, and we're going to talk about the extension of that today, is the drive for Allianz to become a truly customer-centric organization. Now, many companies in the world say that. It's one thing to say that, it's really another one, particularly in our industry that was not invented by customers actually, but by regulators for the most part. It has been quite a journey. And it was about renewing our core. We'll talk about that more, that we've been doing for almost a decade now. But at the heart is customer centricity and mobilizing the real asset that Allianz has, our people, to deliver that customer centricity. And financials are super important. We're going to spend a lot of time on financials and the validity of those, and are they really ambitious? But financials are an outcome of outstanding performance at the customer and the people interface. And everything else is a supporting tool for that. Now, in 2018, we launched a second story because we said in order to be really great, we have to reduce complexity. Our industry is fraught with complexity, a lot of that of our own making, even though regulation, which is not getting less, making a huge difference, but just the history of Allianz growing over next year 135 years in more than 70 countries, and many, many businesses have added complexity that, most importantly, customers don't want to pay for. Customers don't want to pay for. So we decided we want to get more simple. And in 2021, we added another component. We want to really get the benefit of scale. Many investors, many people doubt that being large is actually a benefit. It's the reason what we usually call in finance conglomerate discount. I spent a lot of time in my prior lives thinking about that. And we actually believe we deserve a premium. Now, this requires to be the best at what we do everywhere, or get the heck out of the things that we're not really good at. So in 21, we started to really in earnest not just look into the mirror, but into who are the leading competitors of today and tomorrow, and how do we bring the best performance into almost everything we do. Because also in our industries, not just Allianz, we'd like to what we call misnomer diversification, that is actually cross-subsidization. Businesses that don't perform, that get supported by others. And we have and are changing that as we speak in order to really be very good. And it starts again with the customers and their representatives. Today, we'll talk about lifting those ambitions even further, because we have one value proposition for society that is truly important, because we want to be the go-to place in uncertain times. We have the strongest brand in our industry by a far cry. In financial service, there's only JP Morgan and a little bit of Amex ahead of us. Everyone else is far behind. We are the most trusted brand in our industry, and we need to make that more relevant for our clients. In fact, ladies and gentlemen, we have more clients that want to be served by Allianz today than we can serve them, because we don't have enough access points for people. It's the first time in our history people want to come to us rather than we selling to them. Second point, we actually report because of financials the way we report. Report by product, property casualty, life and health insurance, asset management. This is not how customers think about us. Customers think about us as being in two businesses, one being protecting what they have, and the other one is helping them to prepare for retirement. That's what they really think we are, and we need to reflect who we are in the way we communicate about ourselves. I hope you're okay over there. Now, the third one is we will accelerate the value creation in Allianz beyond what we have done in the past. By the way, when I talk about the past, I also mean the 17 years that I've been with Allianz. Because before, we often did really well in boom times and not so well in bust times. Long-term average until 2017 ROE was 9%, not even double-digit, 9. We've had more than 13%. Recently, we go to north of 17%. And at this point, we believe we have enough spread over cost of capital that we can now accelerate growing the franchise. So growing it smartly, not where the volume is, but where the value is, powered by even stronger productivity and strengthening resilience is the story that we want to tell you today. And hopefully not just tell you a story, but provide you with the facts that will make it credible. Just a quick look at what we've done on financials and on the health indicators. We gave ourselves targets in 21, and we had no idea how COVID would end. We had no idea about the distortions that would come, not just structured alpha, but the war in Ukraine, the war in the Middle East, the Cold War between China and the US, everything else. And we have outperformed almost every single target that we've given ourselves. But more importantly, we're lifting the ambition even further. And I will not go through various KPIs. At your request, we are focusing now more on Solvency II operating capital generation. Claire-Marie will talk about that in detail. And we wanted to clarify a policy on distribution that we've had, but we've never made explicit. By the way, neither internally nor externally, to say, at a minimum over the next 3 years, we will pay out 70% of the net cash that we generate. And we want to make sure that not just the financial indicators, ladies and gentlemen, but also the health indicators that drive this success, most importantly, customer satisfaction and the resounding excitement of our employees stays at the very top. Now, I will not talk a lot about the perma-crisis that is around us. Geopolitics, climate change, demographic change, technology. We spend a lot of time talking about it every day. I do not want to talk about that. But one thing that's totally clear, we're operating in an environment where the state, even the strongest states, have no more the power to provide our citizens with solutions that they need, whether that's in healthcare, that's in retirement. They're already struggling to provide the basics good on transportation and infrastructure. And we see that not just as a threat, but a huge opportunity. And the same is rising polarization. We have a huge issue in democracies because the middle class is being hollowed out. People need help and they're not getting it. Now, that creates huge opportunities for those that have the trust of society. Not just the trust of their customers, but the trust of society. And as we said, we want to be the most trusted partner. That comes with a lot of cost, but also with a lot of opportunity. So our value proposition, we secure your future, as a purpose in our aspiration to be the most trusted partner for protecting and growing our customers' most valuable assets. I don't like assets, actually, as a word. I like what is important to us. That may be our health, that may be the safety of our relatives is at the core of what we do. We believe that's highly relevant. We are not just another financial services provider. At least that's not what we want to be. It comes with 3 promises. Let me reiterate them, and they will be resounding in everything you will hear today. We need to have strong resilience, and we need to be credible with that. We need to deliver benchmark results at scale, and we need to carefully balance all our stakeholders. Now, very quick. Brand strengths. This year, all-time high, number 29 in Interbrand. It's not just Interbrand. Brand Finance, we're the number 1 insurance and asset brand. And in the Edelman Trust Barometer, most relevant for us, the most trusted insurance company amongst our peers. Second, and this shows that the numbers actually are not baloney or gobbledygook, as some of my UK friends would say. Customer satisfaction at the top declined a little bit last year. Why? Because the premium increases in P&C and pressure on life crediting rate really didn't make customers very happy. So you see that. So despite massive investments in brand products, and especially service quality, we had a very slight decline. Actually, on the loyalty leader side is one of the bigger businesses that went down that have a significant impact, despite them trying, by the way, very hard. But it shows that the customers give us very clear feedback. And it means for us resounding reinforcement on being not just the brand and the product leader, but also the service leaders in order to improve price-value perception. So we monitor that very much. By the way, as for you as investors, a very important topic. Affordability of insurance and financial products will become, in my opinion, to the forefront of what we're going to discuss over the next few years. Now, this is something I'm super proud of. When I joined 17 years ago, we were great in motivating our people. But when you look at just the simple facts, we were okay in terms of employee motivation and well-being. Okay, not great. Today, we are the benchmark in our industry. And I'm very proud of that. I mentioned this earlier for our people. We've just been nominated one of the best places to work and one of the top 25 in the world. By the way, a few of those companies reside in Germany. The number 1 in the world is DHL Deutsche Post. But even in Germany, we're better than them. Even in Germany, our home market, we're better than them. And there are many other items that you can talk about. Diversity, inclusion, we're number 2 globally after Accenture, and we are in the number 1 in this country. I would have never thought this to be possible. And it's not because we are only super nice and everything goes in Allianz. It's really we've been able to convince our people that serving clients better than anywhere else is at the heart of what we do, and they really love it. They also love this fact that we have a highly ambitious agenda on sustainability that is not just climate change. I mentioned inclusion and diversity. We're the only company in the country where the board has an equal share of men and women, except me, of course, at the moment, but they, at some point, will also fix that. Now, resilient value creation with strong upside from scale. What does that mean? I'm just going to go quickly and show you, because critical investors will say, I checked your presentation in 21, footnote 24, and it says you would do the following thing, and you didn't. We'll talk about that. We don't think that way, but we looked at the 5 levers that we've been pulling over the last 3 years, and by and large, we have delivered. We will never deliver on anything all the time. We are humans, but we really stay focused. Allianz is an amazing delivery machine. It just needs to be oiled, and it needs to be changed while we are running, but it delivers. And that leads to the fact that we've been, as I said, outperforming most financial targets in aggregate anyway. On the business level, we had a slight movement because of the bear market in bonds. We had less earnings in PIMCO the last 3 years than expected. I think that we'll catch up very, very soon. Christian Strack will talk about that. But we outperformed on property casualty, something nobody wanted to give us credit for at the time, by the way. Remember, we were in COVID. So the plan was 6.6. We had 7.8 billion, and that was not an easy thing to do, given the massive inflation we have seen on claims. That is, by the way, still ongoing. So that's another way to look at it. Comes with tenure and age, you may forgive me, because I'm looking over the last 10 years now. And we wanted to grow the company We've added 50 billion in revenues, more to come. That's the estimate for, by the way, all the numbers on 24 are estimates that we're taking out of market consensus. They may be actually better. And operating profit has been on target, earnings per share on target, and dividend per share even higher. And let me repeat, we really believe that one of the key value propositions in an aging society is for Allianz to be a highly reliable partner in delivering dividends. That is what people really need. And that's why we've been focusing. We do it for our investors, but we particularly do it for people that are in retirement that need the dividend income. We are now one of the top 10 dividend payers on the planet. And we know how important that is. We are also now the most widely held stock of retail investors in this country, which is important because it comes with trust, but also responsibility. And what's even more important for me in this respect is now more than 75% of Allianz employees are shareholders. Can I repeat that? More than 75% of Allianz employees are shareholders. It was 17% when we started to revamp the program end of 2017. So just in 7 years. So all the productivity gains we share with our people, and that pays into loyalty, as you've seen that. Now, I have some self-criticism to talk about, and that's this one. We'd like to be of the top of the house in terms of total return to shareholders the last 3 years. We were not the top. We were above peer average. That's fine. 20% is not shabby, but other people have done better. 3 reasons in our own mind. Structured alpha really shook a little bit the trust in do we have risks in the operation side under control? We'll spend some time on it later. Cannot repeat itself. Second, we had initially more claims inflation in P&C than we thought was addressable. So we're a bit late, about 12 to 18 months late in addressing it. We have it under control now. Klaus-Peter will talk about it. And we had the fixed income bear market. I add a personal favorite of myself. I think there is something that calls Angst. Angst is a German thing, but it also resides in other things. Big balance sheets are not very popular in times of crisis, and people always worry about our balance sheets. There's nothing to worry about. We believe, but it's not for us to believe, it's for you to believe and our shareholders to believe, so we can do even a better job. And Clamery, again, we'll talk about that to make sure you can sleep well at night. Now, how do we think about lifting ambitions and unlocking Allianz potential even further? So I mentioned it earlier. We want to be the most trusted partner for protecting and growing your most valuable things. We want to do that by really bridging the protection gap and providing integrated retirement solutions, because again, this is how customers think. This is not how accounting thinks. It's not how the product provider thinks, but this is how customers think. So we want to show you the world outside of Allianz from a customer lens, more and more importantly, not just with the accounting view. We have 2 world-class businesses, therefore we're going to present to you protection and retirement, and we are adapting. It's very important. The financial services market and industry we serve today is not the world that I entered 25 years ago. It was not the world that we had 10 years ago. So we need to adapt. And one of the amazing things that Allianz has, and that's, I think, underappreciated, but is for you to judge, is really the great power of how we not just diversify, but how do we grow businesses that are highly relevant over time until they become to scale, and I'll show you some. So about 45% of our profits come from life, the traditional life businesses, that's, by the way, highly profitable, and asset management, that form the core of what we call our retirement businesses. And the rest, then, P&C retail, that you know, commercial, and then there's health and protection that has been a little bit of the stepchild, at least from the investment community, because we're hiding it into our accounts, and I will show that to them. Already more than 11% of our profits come from health and protection, profits that have been growing double-digit for a number of years. And it also shows that P&C retail is 25%, and the commercial is not the same size, yes, but we are a sizable player. But the overall picture is very, very balanced. So we're not depending on a reinsurance super cycle or commercial line super cycle or any super cycle. We really know how to manage this across the part. And we believe the opportunities are unbound. I remember 20 years ago somebody coming to me very clever and says, auto insurance is dead, because claims frequency is going to zero. Well, the opposite actually happened. If you look in terms of severity, it's never been higher, it's unabated, and there's lots of things to be done to control the cost of owning any kind of a moving vehicle. We have new risks coming on cyber. We have exciting stories to talk about how do we do that, particularly with our partner coalition. And we have an amazing challenge coming that's spiraling healthcare cost. Healthcare, in the way we know it, may become unaffordable for many people if we don't do something drastic very soon. And this is about being smart, not just not spending more. Again, Sima and Klaus-Peter will spend a lot of time and give you some really cool stuff to discuss on what we're going to do about these opportunities. On the other side, we have massive changes in the investment markets, in the way people buy retirement solutions. We need higher returns because, as we all know, governments have no interest to have interest rates on their debt at high level of points. The markets have not been able to really ask for the proper return, even though I have to say 2% real return in the US now is pretty cool. In Europe, we may not see that because the governments need to print money and need to keep interest rates low as possible in order to fund their deficits. So we need new sources of return, and they need to be attractive on a risk-adjusted basis. That's something that we're very good at. We don't need high nominal return, we need risk-adjusted returns because the pressure on public systems are high, and there's huge opportunity because of the accelerating generational wealth transfers that are coming. Lots to be said about property casualty in retail. I always wonder why people talk about us in this risk as having a challenge or anything else. These numbers tell you everything about who we are and who are the others. It also tells you about what the trajectory are after the inflation spike on where we are and have been on underlying loss ratio development, just to be clear. And this is the plan going forward. Double-digit profit growth until 2027. And again, Klaus-Peter will tell you how we do that out of retail alone, more than 5 billion profits. Another story. I just talked to one of you in the room who said, it's really interesting, the cool stuff Allianz has, particularly the new things. Now, some of these things are not new. One of the greatest things my predecessor, Michael Diekmann, was to create Allianz Partners, because it says we need a platform that serves B2B2C clients. It was quite inspirational at the time. I really wasn't sure how roadside assistance fits together with travel insurance and other things. It has been one of the biggest things we've done. We are now the #1 global service provider for B2B2C, growing double digits. We will be very soon the leading EU direct insurer, and we will make money. It takes a while to get there. We are the #1 travel insurers globally. By the way, very funny, when you lead some of our competitors' news like we are the #1, I don't know where they get their data from. This is the real data. And also on B2B, the leading claims platform, and this is super important, is in our house. We actually believe it's not just an indispensable service to have, but the platform to control that people cannot replicate. Why? If you settle a claim through Solved now, you save on average 1,000 euros in our directed tariffs. 1,000 euros is running, depending on your run the numbers, 15 to 18% of every claim. That is not just good for you as investors. It allows us to offer much more competitive tariffs than anybody else can do. Now, the other thing, and that's very, very important, creates super strong synergies. Insurance typically has been perceived as a low involvement, actually negative connotation product. Ladies and gentlemen, the opposite is true. With the services we're building around our products, not just net promoter scores are going up, contact frequencies, propensity to buy, to propensity to renew are going up massively. So while some people believe you can be a monoliner and be great at it, we don't believe that. We actually believe having customers come to us is not just good for them, it is very good for us. Now, commercial, I'll talk about it. Chris Townsend is not presenting today, but I will try to cover it as much as possible. Just to tell you, again, double-digit growth in profit is what we are planning until the end of 27, with a combined ratio below 92%. and in an environment where claims inflation is very high. Why do we believe we can do that? We're actually not present in a number of the segments that are still very attractive despite some of the areas of the market softening. So we always say, people say, you're talking it down because it's good for you and bad for competition. It's nonsense. We are very strong in SMC and mid-corp, and we are far below our normal market share in some of these segments. So we're going to grow because we can. And there's many things that we can talk about. By the way, another thing that's often overlooked by the way we report is, you very well know, with Allianz Trade, we own the world's leading trade insurer. And after a crisis, by the way, and I want to use this example to really compliment Chris, Eileen, and the team at Allianz Trade, one of the most successful rebranding campaigns in the history of Allianz is massively improved customer satisfaction, growth opportunities. Now our market share is 40%. And we're actually going down, 40%. We're coming from below 30. And people after COVID said this is a product without value. The opposite is true, ladies and gentlemen. There's so many conventional wisdoms that are not true. And it's a core part of what we do in commercial. And that's also often not understood. Health and protection. We have a lot of competitors that have been putting health and protection in the front of their presentations for a long time. We were loath to do that because we wanted to first get good, and from good to be pretty good before you show you some numbers. Now let me show you pretty good. I think we're one of the few places on earth where we run product design, data, pricing, and underwriting centrally out of one database, globally. We've just entered an Asian healthcare market without ever having been there because we can leverage the global data we have on morbidity in a way that nobody else can and replicate the data that others needed decades to compile. So what have been the consequences? And what are we going to do? Again, we are going to grow profits more than double digit. By the way, the ROE in this business now 26%. It wasn't always that great when we started the journey. And the reason why I show you these numbers, because we don't report them properly. Some of that is in P&C, some of that is in health, some is core in life. And again, I personally believe we can even do better, but by 27 it's going to be more than 11% of the group profit base, so a very instrumental part of what we do. That the retirement opportunity is massive, I don't think I need to elaborate, and what I only want to remind you of, we're already very strong in the most important markets that we're in. We can do better in Asia, and we will. Now let me just highlight a few facts, and we're going to hear more from Andreas Wimmer today and Christian Schrack on talking about it. We have amazing numbers, whether that's around capital productivity, whether that is about market positions. We are the number 3 life insurer globally, and everybody thinks it's a problem. I think it's the biggest opportunity we have, where everybody wants to be life today, asset management tomorrow, P&C the day after tomorrow, and then they reinvent themselves, that's called. We believe people need retirement products. They need to be managed properly, not at the expense of shareholders' capital risk. And by the way, when people talk about building alternative investment capabilities, Allianz has been there, is there, and will be there. And we'll learn more about that. Here's just a couple of examples. This is what we want to do. We want to have, out of our retirement business, more than 10 billion profits by 27. Let me repeat that. More than 10 billion profits. This was almost as much as we had when I started here in the segment as CEO. And we will grow AUM at least 8% a year. I think we can do even better, but we are very cautious. Capital intensity is something that somebody talks about all the time. I just wanted to mention this is what we promised in 21. There is something that Andreas will talk about, and that's very important. That is capital efficiency of AZ Life. We are announcing today a very innovative flow insurance and info insurance product called Sconset that we've developed with PIMCO. I think it's quite amazing what has been done, and it's the beginning. It's not a one-off after 3 years. It's the beginning of a systematic drive to make our US life business and all of Allianz life businesses more capital efficient. I could spend an hour now on services. Since I spend a lot of time and we don't have a lot of time today, let me talk about more the third chapters and the 3 value creators, because I want to really stay in time. The first one will be driving smart growth. And we have a really important reason why we call it smart growth, because many investors told me, Ollie, when insurance companies come and asset managers, they want to grow faster, we fasten seatbelts, because that comes typically with a lot of growth that turns out to be not so profitable a few years down the line. So we are very cautious about where and how we want to grow, and we'll talk about that today. How do we fund that? How do we fund that? Not by reducing payouts, not by doing large M&A. What we really want to do is reinforce the productivity journey that we've been on, much more systematic, much more consistent than many other places. And we're now at the point where we believe we can leverage not just AI into creating global scale. And then Claire-Marie will talk in detail about how we strengthen our resilience further. So these are the 3 things: driving smarter growth, getting even better on productivity delivery to fund additional growth, and driving resilience. Now, when you look at the last few years, most of the growth came through increasing prices. And we've been able to improve productivity and prices also because of that. It's totally clear. And we were only able to do it because our brand, our service quality was such that customer retention was still good. It's not great, but still good. As we go forward, we want to double the organic growth. We want to double organic growth. For Allianz, it's the first time in history, and we want to do this in a way. Now, these numbers look small when you say, only 0.5% more on customers net, cross-sell 0.5%, so that's nothing. Well, Klaus-Peter will show you that this means 30% uplift in growth on a gross basis. Now, the second one is productivity. So we've done a lot: product harmonization, IT decommissioning. We can spend hours. Barbara is here. She's happy to talk to you during the breaks. We're continuously delivering Allianz Direct, which we know everybody from the number side criticized, will be the first insurance company operating on one platform across countries by the end of the year. There's no other place where that is the case. Just took a little while. This is our journey on productivity, and people always ask, when will this end? Okay, when it's not ending. It's continuing, and we have a very clear plan to continue to do the 30 bips per annum until 27 and beyond, doing the things we have been doing and more. And the more has something to do with the fact that we now are integrating the view on distribution, where we are getting value out of distribution and only pay for value, not pay for volume anymore. Now, resilience. Last, certainly not least. Now, when we talk about resilience with our investors, they always ask about credit ratings. They ask about Solvency II ratio. Solvency II ratio more for payouts. Can you not pay more? If your solvency ratio was higher, could you not pay them out? And I'm not trying to be cynical. But when we talk about resilience, we mean something else. And there's 2 components to it. One, it is about operational resilience. Again, we were stressed with structured alpha, with Nat Cat, with inflation, with enormous challenges over the last 3 years. Many, by the way, people really ask, how can all of this be handled by your people? You saw how our people react to the pressures. They're ever more excited. They're ever more excited. We'll also bring operational resilience because we are not depending on selling a product and selling a claim and then having people wonder what they're paying their premium, because we are really diversifying the customer base. We're investing in customer engagement directly, not just through intermediaries, increasing the share of direct customer ownership, which, by the way, protects your margin as shareholders. And on retirement, the same. We need to bring down capital intensity. We need to make sure that the reserves are super strong and that the investment portfolio has no doubts that it is super strong. And in asset management, last but not least, have crisis-proven risk management and investment performance at the core. And let me repeat, risk-adjusted investment performance at the top of the industry. The other one is financial resilience, and I'm not going to talk about because Claire-Marie will spend a lot of time on it, so let me just move to the outlook to stay broadly in time. So we're going to lift our ambitions yet again. Remember 21, there was already a lot of lift up, and we would not present these numbers to you if we didn't believe the organization would be behind those targets. So that is not Oliver or the board of management. This is 175,000 people that will deliver this. 7 to 9% EPS growth, capital generation between 24 and 25%. Return on equity, this is approaching double what our historical average has been. Payout at a minimum of 75% on average over the time period. Being the true loyalty leader in our industry and remaining at the top of the world in terms of employee engagement. This is no less than an ambitious program. Now here's the day where we'll talk about how we will, or how we are going to make this happen. Only will means it will happen for sure, but we'll try everything. Klaus-Peter will talk about, in 1 minute, about property casualty retail insurance. Thereafter, Sema will have a coffee break. After the coffee break, we'll go through asset management, life and health. This is still the traditional reporting view, if I may say. We'll hear from Christian, the president of PIMCO, and I want to extend a special welcome to him this morning about where PIMCO is, and then Claire-Marie will finish sort of the presentation part with the CFO view. After the next break, coffee break, we'll have Q&A, and then we'll invite you for lunch. After lunch, we'll have small group Q&A sessions, so we don't have to do this in a large audience. The whole management team will be here. We'll be available for your question, all your poking, all your I don't believe this thing, or can you not do more there? And we're really excited about you being here. Let me say that again, particularly those that made it to Munich today. We're very happy to host you. And with that, Klaus-Peter, and I think I'm on time.